Ladies and gentlemen, today we stand at the crossroads of uncertainty in global markets, rising inflation, and shifting investment trends. And while gold has always been seen as the traditional safe haven, silver is quietly positioning itself as the dark horse that could outperform gold in 20. Silver is no longer just a precious metal sitting in vaults. It's a powerful hybrid asset, both a store of value and an industrial necessity in a rapidly changing world. From green energy to technological revolutions, silver's role is expanding like never before. Over the course of this talk, I will give you 5 powerful reasons why silver could surprise everyone and potentially outshine gold in 2025. These reasons go beyond tradition, beyond fear, and into opportunity. When you think about silver, most people immediately picture it sitting in vaults, in coins, or in jewelry. They view it in the same way they view gold, a shiny object, a traditional safe haven, a hedge against inflation. But that way of thinking is incomplete. And if you stop there, you miss the deeper story. Silver is not just a store of value, it is also an industrial necessity. And this dual nature is exactly what positions it to potentially outperform gold in 20. When you look at markets, you always want to look beneath the surface. You don't just look at the price, you look at what drives the price. You examine the fundamental forces of supply and demand, the macroeconomic pressures shaping investor psychology, and the structural realities of how that asset fits into the world. And when we do that with silver, we begin to see a much bigger picture than most investors realize. Let's start with its role as a hedge. Inflation is not some abstract academic concept. It's the lived reality of money losing value over time. When governments print too much money, when central banks keep interest rates artificially low, and when debt piles up higher than income can support, inflation becomes almost inevitable. People feel it in the grocery store, at the gas station, and in every bill they pay. Historically, investors have turned to gold as their shield against this erosion of purchasing power. But here's the critical piece. Not everyone can afford gold, especially when its price is elevated. Silver, being much more affordable, becomes the people's gold. It provides the same hedge, but at a fraction of the cost. In times of rising inflation, when people seek safety, silver attracts both small investors and large institutions looking for value that still carries the credibility of a precious metal. Now let's consider the industrial side, because this is where silver separates itself from gold. Gold is primarily a financial asset. It sits in central bank vaults and investor portfolios. Silver, by contrast, is consumed. It doesn't just sit idle. It's actively used in manufacturing, technology, and especially in the transition toward green energy. Think about solar panels, for example. Every panel needs silver to conduct electricity efficiently, and as the world races to decarbonize and shift toward renewable energy, demand for solar technology is projected to rise dramatically. Add to that the expansion of electric vehicles, each of which uses silver in its electrical systems, and suddenly silver is not just a hedge, it's a critical raw material in the industries of the future. That dual role creates a very rare dynamic. On one hand, you have the traditional demand of investors treating silver as a safe haven in uncertain times. On the other hand, you have an expanding industrial demand base driven by technological innovation and global energy policy. When you combine those forces, you create a situation where silver doesn't rely on just one driver of value. It has two engines pulling it forward. And in a world where diversification and resilience are key, that duality makes silver uniquely powerful. Now let's bring it back to 2025. Inflationary pressures are not going away anytime soon. Governments around the world are running debt levels that are historically unprecedented. Central banks may raise interest rates, but that doesn't eliminate the structural imbalance. It simply shifts the burden. Meanwhile, industrial demand for silver is projected to continue growing, not shrinking. When you combine those forces, the erosion of fiat currency value and the unstoppable growth of industrial applications, you get a setup where silver could not only protect wealth, but expand it at a faster rate than gold. Here's another way to think about it. Gold thrives almost exclusively in times of fear and uncertainty. It does well when investors want safety and preservation. Silver thrives in those same conditions, but also in times of growth and innovation. If the economy struggles, silver benefits as an inflation hedge. If the economy transitions into a new technological era, silver benefits as a critical industrial component. That flexibility gives it more pathways to outperform. Gold doesn't have that. Gold's usefulness is static. Silver's usefulness is dynamic. Of course, there's another dimension that investors often overlook: the supply side. Silver mines do not exist in abundance relative to gold. In fact, a significant portion of silver production comes as a byproduct of mining other metals, such as copper and lead. That means silver supply is not always responsive to demand increases. You can't just flip a switch and dramatically increase production. This limited supply, combined with growing dual demand, creates the potential for powerful price movement. And when you consider that the silver market is much smaller in overall value compared to gold, it doesn't take nearly as much capital inflow to push prices significantly higher. This brings us to the psychology of investing. Markets are driven by narratives as much as by fundamentals. The narrative of silver has been asleep for years compared to the constant drumbeat around gold. But when narratives shift, they shift fast. If inflation continues rising and people begin to recognize silver's dual value proposition, momentum could build rapidly. Retail investors could rush in because it's accessible, while institutions could move in because of the industrial and macroeconomic alignment. That convergence creates the conditions for explosive moves. So when you evaluate silver's potential in 2025, you cannot look at it in isolation. You must see the full spectrum. Silver is a hedge against inflation. Silver is an industrial necessity. Silver is the accessible alternative to gold. Silver is the undersupplied asset that can spike on capital inflows. Each of those factors alone would make it worth considering, but together they create a unique investment case, and that is why its dual role positions it differently than gold. Gold will always have its place. It is the ultimate symbol of wealth preservation, but silver's story is broader. It's the bridge between the old financial world and the new industrial world. It's where tradition meets innovation, and in a time of global economic strain, technological acceleration, and shifting investor psychology, Bridge may very well carry silver ahead of gold in performance. The bottom line is this: silver's dual role is not just a curiosity, it's a competitive advantage. It gives investors more reasons to buy, more scenarios in which it thrives, and more leverage to global shifts than gold can offer. As 2025 approaches, the smart investor won't be asking, should I own gold or silver? They'll be asking, do I understand the unique dual nature of silver, and am I prepared to act before everyone else wakes up to it? That's the real opportunity, and that's why silver's potential to outperform gold in 2025 is not just possible, it's probable. When you think about the transition the world is making right now, one of the biggest shifts underway is the movement toward green energy. It's not just a policy direction, it's an economic reality. Governments are setting ambitious targets for carbon neutrality. Industries are pouring billions into renewable technologies, and investors are redirecting capital into companies that are aligned with sustainability. And in this massive shift, silver isn't just an accessory, it's a cornerstone. Silver is essential in solar panels, electric vehicles, batteries, and a wide range of technologies that will define the energy future. That industrial demand story is what separates silver from gold and positions it to outperform in the years ahead. When I think about markets, I always think about the fundamental drivers: what creates demand, what restricts supply, what incentives are pushing people, companies, and nations to act in a certain way. With silver, the industrial side creates a structural demand that isn't optional, it's necessary. Solar panels, for example, require silver for their photovoltaic cells. to convert sunlight into electricity. There is no substitute that performs as efficiently at scale. As the world accelerates its push toward renewable energy, with entire nations setting deadlines for net zero emissions, solar capacity has to grow exponentially. That means silver demand rises right along with it. And it's not just solar. Think about electric vehicles. Every EV requires silver in its electrical connections, circuits, and battery systems. As automakers shift their production lines from internal combustion engines to electric drivetrains, the need for silver increases in ways we haven't fully priced in yet. This is not some temporary trend, it's a long-term transformation of the global transportation system. By 2030, the majority of car production is projected to be electric or hybrid. That's not decades away, it's happening right now, and silver is directly tied to that transition. Now, when you combine this industrial demand with the financial demand we already know exists for silver, you create a dual purpose asset that is very rare in markets. Gold doesn't have this. Copper has industrial demand, but lacks safe haven status. Silver sits at the intersection. It's both a hedge and a growth asset. And that intersection is incredibly powerful because it means silver has two independent reasons for investors to buy. If inflation is running hot and currencies are weakening, silver attracts capital as a safe haven. If the world is investing heavily in renewables and technology, silver attracts capital as an industrial necessity. Either pathway increases demand, and together they amplify each other. When you look at the numbers, the scale of this industrial pull becomes even clearer. The solar industry alone accounts for more than 10% of annual silver demand today, and that number is projected to rise significantly in the coming years. Electric vehicles and 5G technology add even more layers of demand. These aren't optional markets, they're essential. Governments are subsidizing them, corporations are investing in them, and consumers are demanding them. That creates a structural demand floor for silver that simply didn't exist decades ago. On the supply side, silver's story is equally compelling. Unlike gold, where mining is driven directly by gold demand, silver is often produced as a byproduct of other metals like copper, lead, and zinc. That means supply doesn't increase just because silver prices rise. If industrial demand spikes, the mining sector can't just turn on a faucet and produce dramatically more silver overnight. Supply constraints are built into the system. So when you have rising industrial demand meeting inelastic supply, you get price pressures that can be very sharp. That dynamic sets silver apart and gives it explosive potential when demand surges. There's also the issue of perception. Investors often underestimate the role of industrial demand in driving silver's value. They still think of it as just a smaller version of gold, but that thinking misses half the picture. When perception shifts, when the market begins to recognize that silver is not only a hedge but also a critical industrial metal, the capital flows can move quickly. And because the silver market is relatively small compared to gold, it doesn't take massive institutional buying to create outsized price movements. Let's also think about the strategic angle. Nations know that the energy transition requires resources, and some of those resources are geopolitically sensitive. Rare earths, lithium, cobalt, these are often concentrated in specific regions, creating vulnerabilities in supply chains. Silver, while more widely distributed, is still finite. Countries that are pushing hard into renewables have to secure stable silver supplies. That geopolitical dimension adds another layer of demand stability because silver isn't just a commodity, it's a strategic resource. Now, looking specifically at 2025, the timing matters. Inflationary pressures are still running high, central banks are struggling to balance growth and debt, and at the same time, the green energy revolution is hitting full stride. Solar installations are expected to surge, electric vehicle adoption is accelerating, and grid modernization is becoming a priority. All of these are silver intensive. You don't need a radical imagination to see how demand could outpace expectations. Another factor is volatility. Silver is historically more volatile than gold, and many investors see that as a risk. But in times of structural change, volatility can actually be an advantage. It means that when the demand story catches fire, silver doesn't just creep higher, it surges. That's the nature of smaller markets with strong catalysts. If you're positioned before the narrative fully shifts, that volatility works in your favor. To put it into perspective, think about gold and silver during previous bull markets. Gold tends to move first as investors seek safety. Silver often lags, but when it catches up, it moves faster and higher in percentage terms. That's because silver's dual nature kicks in. Investors see it as undervalued relative to gold. Industrial buyers continue consuming it, and suddenly you have momentum layered on top of fundamentals. The real takeaway here is that silver's industrial demand is not an optional storyline, it's baked into the future of the global economy. As long as the world continues to electrify, digitize, and decarbonize, silver demand will grow. That's not speculation, it's structural. When you combine that with its financial role as a hedge, you create a case for silver in 2025 that is more robust than at almost any point in modern history. So the question becomes, are investors looking at silver with the full picture in mind, or are they still stuck in the mindset of silver as just a cheaper gold? Because the investors who recognize the dual role, especially the growing industrial side, are the ones who will be positioned ahead of the curve. Silver isn't just following gold's shadow anymore. It's carving its own path, driven by forces that are reshaping the entire global economy. And in 2025, that path may very well lead to outperformance that surprises a lot of people.